We have seen a sharp sell-off in the broader market space since the beginning of this month. The Nifty Small and the Mid-Cap indices have delivered negative return as compared to their frontline peers, the Nifty as well as the Nifty Bank. But how does this correction look like in the terms of an overall context of things if you compare it to 1 year and 3 years as well? Let's have a look at the index performance first. The Nifty and the Nifty Bank, like I was telling you, since the beginning of this month have delivered positive return, 3.5% return for each of them, while the Nifty Midcap index is down 1.5% and the Small Cap index is down 4.5%. Remember that yesterday these numbers were even worse because we had a 2% intraday recovery in both the small and the mid-cap indices. However, in the context of the 1 year performance, the mid and the small cap indices have outperformed significantly as compared to their peers. The Nifty in the last 1 year has delivered 44% positive return, the Nifty Bank 61% positive return, while the small cap index has outperformed with 70% return, and the small cap space has even outperformed by a further extent to the tune of 86%. Now, interesting to note that if you have a look at the ratio analysis of these two broader market indices as compared to the Nifty, you can see that this ratio has reverted to its 5-year mean. From the chart, you can see that in 2018 the Nifty mid-cap to the Nifty ratio was nearly 2 times, which had corrected to almost 1.4 times in 2020, and now once again it is back to its 5-year mean, which is close to the 1.7 mark. Similar is the case for the Nifty Small Cap as well, which has reverted to its 5-year mean. In 2018, this ratio was 0.9 times, which corrected to almost 0.4 times in 2020, and now once again climbing back to 0.6, which is exactly where the 5-year average also lies. So one can say that the underperformance that was delivered from the broader market indices from 2018 to 2020, the next 1.5 year has been spent in recouping those losses and reverting to mean in a true sense. Also, there has been a significant valuation catch up for the broader market indices. The current estimate price to earnings multiple for the Nifty stands at 21 times, which is very similar to what the Nifty Small and the Mid-Cap indices also command. At the start of 2021, there was some bit of difference. Nifty was 22.5 times, the Nifty Mid-Cap was 25.5 times, while the Nifty Small Cap was trading at 19.5 times. Now, why do I say that there was a catch-up is because if you have a look at the lowest valuation in 2018 for the Nifty, it was 16.5 times. For the mid-cap index, it was 17.5 times, and for the small cap, it was 12.5 times. So, in a true sense, the Nifty Small and the mid-cap indices, there has been a valuation catch-up from about 17.5 times to 21 times on the Nifty mid-cap. And for the small cap, it has risen from 12.5 times to 21 times. In the overall context of things, the current correction looks like a small drop in the ocean.